Welcome back to Entrepreneurial Edge. Building wealth is a marathon, not a sprint, and there's no better guide than Warren Buffett. Today, we're diving into his timeless wisdom to help you build your empire from the ground up. We'll uncover the strategies Buffett would use in today's market, breaking them down into actionable steps you can use right now. Let's dive in. One of Buffett's most famous quotes is, "Be fearful when others are greedy, and greedy when others are fearful." This perfectly encapsulates his approach to investing. Don't just blindly follow the crowd or chase the latest hot stock tip. Instead, do your own research and look for opportunities where others might be overlooking value. Buffett only invests in businesses he understands. Focus on industries and companies that resonate with you. Read their annual reports, understand their competitive advantages, and project their long-term potential. Remember, you're buying a piece of a business, not just a ticker symbol. Imagine your investments as a flourishing money garden. The 8% spending rule, a cornerstone of Buffett's philosophy, is all about preserving the seeds of your wealth. Instead of spending every dollar you earn, aim to live off a maximum of 8% of your portfolio's annual growth. By keeping your spending in check, you allow your investments to compound exponentially over time. Think of it this way: every dollar you don't spend today has the potential to grow into multiple dollars tomorrow. Even when your income increases, resist the urge to inflate your lifestyle. Reinvest that extra income back into your portfolio and watch your wealth snowball. Contrary to what some might say, debt isn't always a bad thing. In fact, Buffett has often used debt strategically to amplify his returns. The key is to differentiate between good debt and bad debt. Bad debt, like high-interest credit card debt, can cripple your finances. Good debt, on the other hand, can actually help you build wealth. One of Buffett's favorite examples of good debt is using a mortgage to buy a property below market value. The key to using good debt effectively is to ensure you're borrowing at a low interest rate and using the funds for an asset that will appreciate in value or generate income. Let's compare two individuals, Sarah and Mike. Sarah diligently invests in a diversified portfolio of stocks and bonds, earning a respectable return. Mike, on the other hand, decides to build a business, a car wash. He invests his savings, takes out a small business loan, and works tirelessly to grow his customer base. Fast forward a few years, and Sarah's portfolio has grown steadily. Mike, however, has not only generated a steady income stream from his car wash, but has also built a valuable asset. Building your own business allows you to create tangible equity and control your financial destiny. Too often, people get caught up in the pursuit of perfection, waiting for the perfect time or the perfect opportunity before taking action. But Buffett understands that success rarely comes from waiting. It comes from consistent action and a relentless focus on improvement. Let's consider two aspiring musicians, Henry and Ethan. Henry, blessed with natural talent, believes his gift alone will lead to success. Ethan, on the other hand, practices diligently every day, honing his skills and experimenting with new techniques. The lesson here is simple: practice trumps perfection. Find what you're passionate about, put in the work, and don't be afraid to make mistakes. Imagine a world with three types of people: wasters, warriors, and winners. Wasters spend every dollar they earn, living paycheck to paycheck. Warriors hoard their money, afraid to invest or take risks, their wealth stagnating over time. Winners, on the other hand, understand the power of compound growth and invest their money wisely. Explore side hustles, invest in rental properties, or build an online business. The key is to diversify your income sources so you're not reliant on a single stream. Even small contributions made consistently over time can lead to significant wealth down the road. In the age of social media and instant gratification, it's easy to get caught up in the hype cycle of the latest investment trends. But Buffett has always been wary of speculative bubbles and short-lived fads. He once famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Don't be swayed by flashy headlines or promises of overnight riches. By tuning out the noise and focusing on the fundamentals, you can make more informed decisions and build a portfolio that will weather any market storm. Thanks for sticking with me on this journey through Warren Buffett's timeless wisdom. Remember, building wealth is a process, not an event. It requires patience, discipline, and a commitment to lifelong learning. If you found this video helpful, Please give a thumbs up and subscribe to our channel so you don't miss out on future videos. Keep learning, keep growing, and keep building your empire.